guys, the party is about to end. And we've been partying hard like no tomorrow for many decades. How many decades? Well, let me show you over here. You see, because we've been living in a world where we print money, we export inflation, we import goods and services, and everybody's happy with that. But then we ran into a couple of stumbling blocks over here, particularly in 07-08, where it was an actual financial crisis, and that's when the money printing began, right? The beginning of easy money and money out of thin air and quantitative easing after TARP and the whole deal back then. And ever since then, what Jeremy Grantham has been calling for years now, the everything bubble, right? It's not just a housing bubble or the dot-com bubble. I mean, we're in the everything bubble. And the first thing to blow was the bond market, right? Last year, the year before, it blew up. But we have many other asset classes in huge bubbles, from real estate to equities and so on and so forth, and a lot of unwinds of existing trades, such as the carry trade, which we got a glimpse of at the end of last year, of how that unwinding could really derail everything in the global financial economic order. Now, this is the S&P adjusted for inflation, so keep that in mind. There is no way that this high ceiling of a level of the S&P 500 adjusted for inflation is not a parabolic move up, which will have a commensurate parabolic move down. That's just the way things work. You don't go up and plateau forever. That's not the way it works. Physics and the rules of gravity apply. Now, the existing regime is about to have a phase change. And this regime has been kind of put in place ever since World War II, Bretton Woods, where America came out on top after dropping the atomic bombs. This is why the dollar is the global reserve currency and English is the international language of business and not German, and the list goes on, right? But this is all kind of shifting now, and we are at this inflection point, I would say, in the year 2025, where I think there's going to actually be a phase shift. And these phase shifts usually have wars accompanying them, right? Because there's a battle for supremacy, and then he who wins gets to kind of lay the law down and set how the global financial order is going to operate. So these things go hand in hand. They're not separate things that aren't interrelated with each other. And you see what's going on with the geopolitical situation around the world, which with everything that's going on in Europe, what was just going on in the Middle East, that was, everybody's talking about World War III then with Iran. So like, it's funny how we kind of lose track of, memory recency issues, and we forget what was just going on. But I expect this to escalate and continue to escalate to the point where the Chinese eventually will get involved with its conflicts in the South Pacific and the whole Taiwan thing, to the point where we will have a hot war, potentially, to accompany the global financial regime phase change as well. In today's episode, we're going to spend a little time to talk about the different aspects of this phase change and what we're seeing that is going on underneath the surface in different asset classes and instruments, from gold, Bitcoin, stock market, bonds, and so on and so forth, and hopefully paint this picture of what's happening so you can see it yourself and be prepared, or start at least to prepare for what's about to come. The whole purpose of this channel and why I created it, why I quit my job, and why I started looking for alternative sources of income and started investing and trading again, is because I'm preparing for this with my family, right? I don't want to get caught in a position where I get fired from my job and I won't have something else to support us, and the list goes on. And it includes even physical security, right? Like where we are actually physically staying and located. And part of the reason why I'm here in Singapore. So I'm not trying to sell you a course or asking for donations or anything like that. In fact, this is completely free, right? And I always thought it was weird how people who were giving trading or investment advice would charge for these things. I mean, obviously, if you're good at what you do, that's how you make money, right? Like, why are you charging people for? I mean, you should, if you're good, you should be just making money. That's it, right? Why are you charging people and making money that way? I mean, usually, if you're doing that, you're not making enough money, and probably you're not good enough, right? And so, no, I'm not charging anything. This stuff is completely free, and the money I'm trying to make here is actually to build FoFty, which is all about, the mindset change that needs to accompany your survival and progress when stuff really starts getting difficult. in the future. If you've been watching some of my recent videos, you'll know that I've been trying to tell you about things before they happen. I told you about DeepSeek on Sunday before the Monday market opened and tanked. I told you about the potential gold audit on Fort Knox before that became a news headline later on in the week. I told you about why wasn't Trump talking about the stock market, and that was actually a scary thing for the stock market. It could be its death knell, and that it would be the sacrificial lamb. And then later on the week, that did happen. I even told you about how the bottom wasn't in more than a week ago when Tom Lee and all the other strategists were saying the bottom's in and we're going up from here. And I said, no, Tom, you're wrong. And I posted it. So that's why I post these videos on Sunday before the futures markets open in Europe, so that you know that I'm trying to tell you and set the stage for what's going to happen in the next week. What I've started doing more recently, in fact, just last week was the first week where I started uploading posts once a day, daily posts, about what I've been thinking about with the market, how I'm trading it, and sharing that with everybody for in between video, basically knowledge sharing, right? And that's gone actually quite well. I actually enjoy doing my daily posts. So last week I posted every day my daily thoughts and how I was thinking about trading and the trades I took, right? And well, that turned out to be a pretty good week last week, where I basically had just 2 positions in SQQQ, the triple levered inverse of the NASDAQ, and UVXY, which is a double leverage long of volatility. And those 2 positions yielded last week, over $35,000 in profit, which is, not bad, right, to make in a week. And if you can make that every week, you're sitting pretty well. So having said that, let's take a look at some of these charts that I've put together for you this week. Now, zooming out into the monthly time frame. Now, monthly, each bar is a month here. So this is a long time frame, right? We're talking years here. Now, I've mentioned it in the past. If you've seen my earlier episodes, I've mentioned this and brought this up as something that I was closely monitoring some time ago. And what I was monitoring back then is this, basically. I wanted to see the MACD cross over, right? And we've had topping tails in the monthly candles, and we've had this big red candle now in the month of February, and we are about to cross over. Back then, when I first brought this up, we're starting to curl right downwards, but now we're about to cross over. Once that crosses over, it's lights out. The last time that happened was back here when we had that huge correction with the neg D over here. But that's something that I think is coming. Now, these are monthly candles. So within the month of the weeks, and within the weeks are the days, and we could have lots of up and down and all that stuff. But if you zoom out into the monthly, this is basically what I've been watching, and we are tracking what I've been watching, and we are going to eventually curl over, complete the crossover, and head down. And when that happens, it's lights out. Moving over to the weekly, and zooming in, you'll see what I've been watching in the weekly, which I've been telling you is the negative divergence on the RSI, even as we're making higher highs on the weekly time frame. And look at this. I mean, 1, 2, 3, 4, 5, 6. So many lower highs on the RSI as we continue to make new higher highs on the weekly. This is a massive negative divergence history multiple times. And we finally curled over. Right, on the weekly. So expect this curling over to continue, right? So I do expect more weakness in the coming weeks. And I'm talking about days here. I'm talking about weeks in the market, just because of the resolution of a lot of these negative divergences on the weekly time scale. And finally, looking at the daily time scales, this one will start to see a little bit more of a bullish, or at least a counter-trend rally positioning and forces coming together here. Because if you look at it, we were greatly oversold, right? Like if I zoom in here, we were greatly oversold down here, and the RSI is basically dead here, and my indicator for the VIX correlation is starting to pick up. The last time it goes up and goes down was when it signaled this top here. And so this is starting to pick up as well. So that means we're likely, as we put in a bottoming tail here on the daily, right at resistance, right at the 200 moving average, and all of the confluences, all the other things that I said, it makes a solid case for some kind of a bounce here. And if we don't bounce, it would be a pretty severe flash crash type of situation on the way down, just because of all the confluences that I just described. So I'm out of the market because I don't know which way. It could go this, or it could just go literally like vertical down, but nobody knows, right? So we hit my price target of 5,700, which, you know, if you followed my daily post, that's exactly where I said I was targeting, and we hit it, and I sold out, made money, and I'm out, right? So stick to your trade plan, have your entry and exit points, do that over and over again, you'll be making money. So I'm out, but let's see what the next week brings, right? And I do think maybe it could be a bounce here, given what I just said, right? But I don't want to, you know, I don't want to change my trade plan. I'm out, and I'll re-enter based on what I see, and you can follow me in my daily post updates. Now, the first chart I wanted to show you is what distribution looks like, and this is volume, right? And what do we see up here? When we got up to this prices, there was massive distribution going on. Distribution being the shark selling to the dumb money, right? And that was going on while we were doing all this stuff, right? And this is a weekly chart. So this is many weeks, which is many days. And you can see here the unloading of what was going on. Now, while that was going on, and if you were looking at my post last week, you'll know that I was tracking something called the Wyckoff distribution pattern. Now, this is obvious now that, you know, after the effect, right? So this post was made after the effect, and okay, you know, like now it's a known thing, but before, the whole point is to know of it before it happens, right? Because afterwards it's too late. And basically what I was talking about, you know, the other week ago when I started doing my daily post was that we were basically looking at a Wyckoff distribution pattern, right? With these very, very well-defined stages. And I said back then that we were entering the LPSY, right? The last point of supply situation, which is where we're going to start to see the downturn. And that's basically what happened, right? And so basically all the money I made was from this LPSY on the right side of the Wyckoff distribution pattern. So if you want to get these daily updates, subscribe to the channel and like, you know, the video, and come check it out, right? Because I posted on the post section of my channel for subscribers to see, and if you hit the bell, you'll get notified when I make the posts. The inflow of gold into the United States, right? I mean, this is just continuing to go on, is ridiculous, right? And let me show you another chart of what this looks like. I mean, this is, it is, there are many people who have been gold veterans, I would call them, gold bugs, who've been trading and looking at gold for like many, many decades. And all of them, I don't consider myself one of them, because even though I'm 50 and I've been doing and watching gold for a while, I'm not like the OG guys who are like in their 70s and like, you know, they've been watching since like the 70s, right? In the 60s, when the gold standard came off and all that. And those guys, right? The OGs, every single one of them is like, I've never seen anything like this. In my entire career, I've never seen gold getting accumulated into COMEX, into the United States at the pace it has been, right? This is simply a generational thing. Like, it's never happened, right? And in the beginning, people were saying, hey, you know, this stuff is happening because they're front-running tariffs, and they were worried about the tariffs coming, and so they wanted to front-run. That's why they're pulling all the gold in. But then the amount was just way too much for that to be explained simply through tariffs and some arbitrage between, you know, the Bank of England's spot price of gold and what it is in the US. And so clearly there's something else going on, right? And while everybody's mum and nobody's talking about it, you can kind of make an educated guess that there's some underlying rewiring going on with the global financial monetary system. That is basically what's going on. That's why the gold, to the degree that it has been, is going into the United States. There's no question about it. There's talks of revaluing gold, taking the existing gold price, which is like some stupid small amount from back in the days, and $40 or whatnot, and marking it to market, which would put it almost at 3,000, which is at today, or marking it higher, right? And if you think about it, if you go back to historical standards, if gold was marked to market in terms of the supply, and they're thinking about creating a treasury that's backed by gold, the U.S. Treasury. If you do it to like a 40%, I mean, we're talking about gold at possibly, 40,000 per ounce, all the way down to 25,000. That's the range of, if we did go back to what it used to be historically and reprice gold, it could be that much. Imagine waking up one day and it's like gold's been repriced from 3,000 to 40,000. I mean, that's crazy, right? But crazy things like this have happened in the past. That's the thing, is this is not new. We've had gold repricing in the past and other crazy activities like that. And so this gold activity that we're seeing is a canary in the coal mine. There's land grabs going on by big government institutions, and it makes, the price of gold right now is suppressed, right? So what it is right now, 2,900 USD per ounce, this is a suppressed price. And if you don't understand the history of gold, like, it is a hugely rigged, I mean, they say the stock market is rigged. The gold market is super rigged. How rigged? I mean, you don't have to look far, right? In 2024, JP Morgan was fined $1 billion, right? So JP Morgan, $1 billion fine. Why? And that was a tiny sliver. Like, that was the amount they made from doing the shenanigans they're doing. They were artificially fixing the price of gold, right? They got caught red-handed. And they should have been fined a lot more, but they let them off easy, right? Only a $900 million fine, almost $1 billion, which kind of covered the money they made, right? They kind of took it out. But I mean, and then the crazy thing is, after they got fined, after getting caught red-handed, manipulating the price of the metal, what happens? Then they become custodians for GLD and SLV, the largest ETFs for gold. Like, so basically, the bank that was caught red-handed, fudging, changing the price of gold in the market, was then becoming, and now has become, the custodian for the largest gold and silver ETF. If that doesn't tell you that there's rigging going on, I don't know what will, right? And so the price we see today is a very managed and suppressed price, right? Get ready for what's about to come. There's going to be some crazy price movements in both gold and silver that we haven't seen in perhaps close to a century. That's what I'm thinking, because again, what's driving it is a face change in the global financial monetary system. Moving along to Bitcoin, and for Bitcoin, I don't want to turn this into a whole Bitcoin session, but it's the other thing that happened last week was the government announced a strategic Bitcoin reserve. And it was something that Trump had said he was going to do, and then he did it, right? So it wasn't like an unexpected thing. It was something he projected he was going to do, and then he did it, right? And so they met on Friday, and I guess some of the Bitcoiners are like, oh, especially the BTC maximalists are like, not liking that there's some other cryptocurrencies in the basket, but there is a separate BTC reserve. And that they're not really buying, they're just converting their confiscated BTC into the reserve. I mean, that's all fine, but the point I'm trying to make here is, aside from gold, which the US was a net exporter of for the longest time, and now you can see all the gold coming in is a huge net importer, is BTC. And they want to make this, and they have said that it is going to, and it is now, in fact, the strategic reserve, right? And what people don't get, is all the Democrats and whatever come on saying BTC is fake money and it's a Ponzi scheme. And I mean, I get it, right? I get it. And I get all the arguments, Peter Schiff arguments. Like, I myself also had these arguments earlier. But the one thing that you need to understand, when people say like Bitcoin is just a flash in the pan, it's a tulip bubble, is the long-term chart of Bitcoin. And what you'll see, and this is what you won't see anything else that is in fact a bubble that has no value, is that after the bubble pops, right, it comes back with a vengeance. And then when that bubble pops, it comes back again with a bigger vengeance. That doesn't happen to any worthless Ponzi scheme bubble, like, let's say, the tulip mania. Right? That popped and it was gone. There's no like re-tulip mania after, one and done, right? That is the way it is, right? But that's exactly not what's happening to Bitcoin. And we have enough time now, right? Decades, to see this behavior. It doesn't go away. It keeps coming back, and when it comes back, it's an even bigger, if you want to call it, bubble before it pops. But the case and the point here is it comes back, and that doesn't happen to complete Ponzi scheme bubbles. Ponzi scheme bubbles, after they pop, are dead. They don't come back because everybody knows about it, nobody's going to do it, it's dead, never comes back, right? That is not the case with Bitcoin. It's apparently here to stay. And that's a realization that the government has made. And so in preparation of what they want to do, I think, is they're getting a commodity thing, which would be gold, right, to back a new monetary financial system, maybe have the treasuries be backed by gold now, because now the debt is so great that nobody believes the United States in terms of its safety for its debt, right? Like they don't think they're going to be able to pay it off. And so that's why the long end of the yield curve was going up so much, even though it did come down now because of this, growth recession scare and whatnot that we're seeing here. But the point here is gold is probably the commodity-based, fulcrum of a new monetary system. And I would say BTC and maybe some cryptos, but essentially the technology underneath it, blockchain, is kind of like the transparency component of the commodity, right? And combined, they'll be fundamental fulcrums of a new monetary financial system. The way it'll unfold, we don't know, right? We know that there are powers that be that want to create a central bank, digital currency or CBDCs, and that's why there's a lot of talk about the long Mag 7 and the globalists and all the stuff that Trump came out last week and said, hey, like stock market. Finally, he came out and said something, right? I told you he hasn't been saying anything. And the first thing he says about when they asked him stock market tanking because of his policies, his answer was, the stock market's basically manipulated by the globalists, basically the long Mag 7 people who want to create the new world order and blah, blah, blah with the CBDCs of the central banks around the world. And so, that's not a surprise, right? And even if Trump maybe was at one point part of the globalist regime, he clearly isn't now, right? He is not part of it right now. Not part of the WF and the whole gang of European, heads of state and the whole thing going on with Ukraine. He's parked himself out of that, right? Now, is he going to park himself with Russia and China? I don't know. But that's geopolitics. Don't want to get too involved in that. Main point here is Bitcoin and some cryptos are going to be part of a new financial monetary system order that the United States is trying to implement. Now, we've got some serious issues. I've shown this chart over and over again in earlier episodes, but while it had been going down, it has gone back up, right? This is the unrealized losses on investment securities, right? Basically stuff that could blow up. Back in the great financial, look how small it was back then, right? I mean, we are talking about gargantuan losses that are being held. So this is basically like having a bad stomach ache and you're not taking a dump. So you're holding all the crap in you, right? Hoping it'll just go away. And it's a huge duty, right? And it was going down because of interest, but then it went back up because yields went back up. And this is going to come home to roost. Like, there is no way that this is not going to just disappear into thin air like as if it never happened, right? It would take an impossibility for that to occur given the magnitude of what we're looking at. And if you think that this is like a big, unforeseen wave, those waves you see in the oceans that nobody, it wasn't supposed to happen, a rogue wave of the size of 50 feet. This is like one of those, right? It's just not going to go away. The wave's going to have to figure out itself over time, right? And I'm telling you, this is coming, right? If you want to call it a tsunami. The other thing we need to remember is the yen carry trade. Now, at the end of last year, I think it was like August of last year, remember when the market just completely collapsed that one day on Monday because of the yen carry trade concerns? That hasn't gone away. That was actually like the appetizer of what's to come, right? And what's to come is more of the Japanese government raising rates. And they have no choice, right? Because they have inflation. And between inflation and raising rates, they're gonna have to raise rates and just print more money to pay off the debt. I mean, Japan's debt is mostly domestic debt, so they can print more money to pay off their debt, the interest payment on their debt, while raising the interest rates. I mean, they're the masters of money printing, right? I mean, Powell has nothing on the Japanese when it comes to printing money. I mean, they were doing long end yield curve control way before anybody else attempted to do it, right? And the point here is that the yen is now at 148, right? Which is lower than what triggered the yen carry trade blow up in August of last year. We've actually gone lower now. So the question here is, what is the Bank of Japan going to do? And we know that the new prime minister of Japan is a hawk, right? He wants to raise interest rates. And so watch this, right? This could come back with a vengeance to bite us at some point in time. Exactly when, I don't really know, but it's coming, right? And make no mistake, Japanese yen is, getting stronger and stronger. The dollar is falling against the yen. That's not good for people in the carry trade. And if you wonder what the carry trade is, we're talking about 2 trillion in assets directly invested into foreign securities out of the carry trade, right? And that's notional 2 trillion. So that 2 trillion could then actually be leveraged to become like 20 trillion, right? If you do a 10x lever. So at a minimum, you got 2 trillion in this potentially in carry trade at a minimum, but we're probably looking at something much larger. And so when that happens and the carry trade unwinds, well, money's going to go out of the stock market, right? And these securities, these foreign securities, primarily the US, where the money had been going, is going to be sucked right out, right? And we see that, right? We see that. Where do we see it? Look, we see this huge spike up here. This is money going outside the world, right? Anywhere else. And we've had this best week ever spike in money leaving, right? And that's not the only measure you see this. You see it going into other places like the German stock market, right? New all-time high, broke out of this long trend. And if you actually look at it, I mean, this is crazy what's been going in the DAX, right? This is probably going to end up in a not so good way, just like the way it ended up with the NASDAQ. You can't have parabolic moves like this, and again, not have a mean reversion that's just as tremendous. That's just not the way it works. You don't get this and plateau, or you don't get this and then have like a steady drip like over time. No, what you get is basically what always happens, a crash after such a crazy rise. Now I'm going to show you a few things that everybody's kind of sharing about the US stock market, about what's going to happen. The first thing is seasonality. So everybody's saying, and I showed this to you last week, now you see more and more of it this week in the blogosphere. But basically what you're seeing is, in March, up to mid-March, bad, goes down, right? And then somewhere around mid-March and into, the summer, basically, markets rally. And so a lot of people are saying this and saying, hey, next week, we're going to rally because the worst should be over now because it's around mid-March next week. And so seasonality is one of the things a lot of people are saying why at least we'll put in an interim bottom in the next week. The other one is you'll see a lot of chart patterns. One of the ones that I see a lot of is basically the megaphone pattern, right? The broadening megaphone pattern. We just hit the lower support line for the megaphone pattern. And so from this pattern, we should probably see some form of a bounce, right? Upwards. Question is how far that bounce is going to go. So that's another reason why people are looking at a bounce in the next week. So I do think, right? I do think we are going to have some kind of a rally next week. But I didn't leave my positions over the weekend, which were, short the market and long volatility, because we parked right at the support resistance zone. And nobody really knows. To be honest, nobody really knows, right? Anybody who thinks they know is they're not Nostradamus. So this is not a good situation for me to have money in the market. I'd like to see the market resolve one way to the other before I decide to put money in. Now, if we do get a bounce on Monday, I may join the markets going up and putting long positions, right? Why not? I don't think it's going to go up and make a new all-time high because I don't think the Wyckoff distribution pattern has been broken. And until we make a higher high, it's still in play. We're still in LPSY range. If we just continue crashing and going down lower, I'm going to look at, are we going to have a flash crash? And if we do, then I'm going to position myself on the short side in long volatility and try to make some cash on a flash crash. But I give that a lesser chance of occurring because just because flash crashes, nobody can actually anticipate when they happen. That's why they are flash. If anybody knew that was going to happen, it wouldn't be a flash crash. So with that bias, everybody's kind of looking for a bounce, and the bounce may happen from a technical point of view, and let's see it happen. And then if it does happen, I'll put some cash and chase it up a little bit. But that's my current positioning in the market. And if you want to see how I trade the rest of the days next week in the market and hopefully have another week like last week, then again, hit the subscribe button and come to my channel, and you'll see the daily update that I post over in my channel. So having said that, thanks for watching. Look, I think I'm going to be splitting this channel up into one that's dedicated more to investing and trading, and the other one dedicated more to FoFty principles, factory resetting yourself, preparing yourself mentally for what's about to happen, and understanding that we're living in a simulation and how do you deal with that, and living a life through that understanding. And so, once I split that, I'll probably make an announcement, and I'll keep the content more separate so that, you're not forced to watch one another if you're not into the other. And hopefully that'll draw in, the right people. And sure, there's crisscross. I mean, if you're trading and investing and you're wondering what the meaning of life is, you can look into FoFty. I mean, that's what I'm doing. And if you're into the meaning of life and resetting yourself, factory resetting yourself, and living and understanding that we're in a simulation, how do you live life according to that, but need alternative sources of income? Well, investing and trading is another way to do that. So you could be interested in what I'm doing over there. So, you could have crisscross and, crossover, just like I said. So having said that, thanks for watching. I'll see you in the next episode. Let's see what the next week brings. Peace.